Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday. Let's take a look at some legacy charts. First things first, though, global crypto inflows continue with another significant week last week. Based on the all-time highs we're seeing in price today with Bitcoin, we are likely going to continue to see decent flows today and tomorrow. One of the pitfalls we could have run into would be flows falling off a cliff. That does not seem to be the case. As price goes up, we need more people. We need more money. That's just how things work. So it's good to see flows steady and not stagnant. It also helps that 4 of the 7 Mag7 are at all-time highs today. We'll get to that in a second. But multiple week over week, 3 billion. I mean, what do we want, right? This is everything anybody ever could have dreamed or imagined. And it came down to 2 things, access and credibility from BlackRock to give it their seal of approval. They are getting the lion's share of flows, followed by Fidelity, Bitcoin getting most of the flows, but Ethereum picking up pretty significantly relative to what we've seen since those ETFs were launched. Solana taking a back seat, and everything you need to know about relative value is right here on the flows sheet. Sol ETH, guess what's happening there? Sol down. ETH BTC still favors BTC slightly, but ETH is certainly strengthening, right? And then we can go down this list for the rest of the relative values, but not seeing inflows broadly. So I'll take a look at dominance in a second, but Bitcoin dominance certainly favored there. And of course, most of this coming in from the United States. Looking at futures volumes, OI, all this is quite high. I have no issues with that personally. We just had ETFs for the first time. We just had options on the ETFs for the first time. We have these new products and we're going to see, ideally, large jumps in open interest, which is what we're seeing. The annualized futures basis, or the futures premium, has jumped quite a bit from October. And that's what you'd expect to see if we are bullish, if we have a bullish expectation of the future. There was a comment made by, I forget who on Twitter, that we are at 105, 107, and the futures basis is only at 14. So that may signify we actually don't have that much froth. We don't have that much leverage built up into the system. If we zoom all the way out here on this, it got as high as 18 in, I think that's November 23. Yeah. The difference, of course, is the ETFs and the ARB trade, the basis trade, everything is new. So it's hard to compare anything to the before times when we didn't have the ETFs. But overall, this looks excellent, as does the cumulative 30-day rolling flows, continuing to see money coming in. That's what we need to see, similar to 2020 into 2021. It doesn't need to be 3 billion a week for BTC. We'll take, 200 million a day. Is that so much to ask, right? 200 million a day, a billion a week. That to me is a good week. So anything above that is just an added bonus. And looking at dominance, individually on any given day, any alt can be up plus 100%. I mean, Velo was up 100% the other day. Ondo is up whatever it's up today. That is always possible. But what dominance helps you do is figure out what is the broad trend here amongst alts. Now, individually, the relative value trades, again, you can do that. I'll take a look at that tomorrow for the Teaching Tech Tuesday vid, how to separate that apart. But what dominance helps you do is decide what is favored here. Where's the money coming in? Is it buying BTC or is it buying the other stuff? And a week ago, 2 weeks ago, it was mean reverting to the other stuff. And now we clearly have strong buyers on the BTC side of the equation. What's also hurting alts is dollar strength. When the next administration comes in, something to pay attention to is, does the dollar weaken like they said they were going to? How do tariffs affect that? And then how do alts perform on a strengthening or weakening dollar? We can guess and say we think XYZ is going to happen, but ultimately until it happens, it's hard to say where we think things will go. Like we can guess and say, if the dollar's weak, alts should do better, dominance should go lower, alt season, right? That is a hypothesis, and it's definitely something I will continue to watch into 2025. Before we go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PVI, DBA, Kraken. Looking at BTC today, we continue to push higher. Last week we had the inverted Adam and Eve concern that held where it needed to hold. And that's why you don't cheat these breakout trades or these chart patterns too much, especially contra trend. You definitely need to let this stuff play out, and that would have been a breakdown below the cloud on a low time frame. That didn't happen. And then eventually we morphed into this inverted head and shoulders pattern, and at the breakout, if you would have waited to 102, 103, you would be fine, right? Certainly would have captured this move since last week. And this could be based on Trump's SBR comments. This could be based on MSTR QQQ inclusion. This could be on Mag7 bullishness. You know, there's lots of things that this could be based on, but we'll take it. We'll take anything, right? This could be just based on flows. In the near term, I think a near-term target, a good zone would be 107 to 110, just based on previous consolidation. So if I was trading this on high leverage, that's the zone I like to let some go partial or all of it and sit in spot at that point. But spot from here, to me, totally fine. Daily, we talked about this last night. TK line's moving up with price. That's what you want to see. We held above the Tenkin. That's what you want to see. And so far, so good. We have, at this point, hit the stretch targets for the previous consolidation. And as long as we have flows, as long as we have good news, as long as we have regulatory clarity, we should be fine. Now, if legacy breaks down, if the Mag7 weren't hitting all-time highs, if the dollar's at 110, maybe Bitcoin has a harder time and consolidates or drifts lower. But so long as it's a weekday and the ETFs are trading, that has been a good sign for BTC. Across the board here, it's more of a mixed bag. Certainly was earlier in the day. Alts not really following, and that kind of makes sense because BTC was hitting all-time highs anyway. Alts tend to follow afterward. Ondo doing well on Trump buying Ondo. He's buying random DeFi coins. So that's something to watch into 2025. But for the most part, everyone's going to have their favorite project and they're just going to trade it, and that's fine. But I would definitely be paying attention to relative value trades, what looks expensive versus something else, what looks weak versus something else, and what just isn't performing versus everything else. Memes in general have kind of stalled out and stagnated. Doesn't mean they can't do well in the future. It's just, you know that there's a lot more risk and volatility in these names versus BTC. That's all. And if you're not getting paid to sit in high risk, high volatility, then to me, you kind of lose me on the argument. But across the board, as long as BTC remains bullish, alts should certainly remain on the bullish side of things. Look at the legacy calendar this week for the US. The big one's going to be JPOW at 2:30 p.m. Wednesday. There is a essentially 100% chance of a cut this week, and that may be also what's giving us a tailwind here. And there's just a lot of upside risk. There's a lot of reasons why we're doing well. There's a lot of reasons why everything on the riskier side of the spectrum relative to the S&P is doing well. Something else to watch for this week would be PCE on Friday. Both CPI and PCE are continuing to curl up, so it's going to be important to hear what Jay has to say on Wednesday regarding that, because he's going to get asked, why are you cutting with inflation rising? What are you looking for in inflation to stop cutting? And he's going to say, we're data dependent, we're meeting by meeting. But if their next SEP, their projection of rates, is hawkish, then I can't imagine the market's going to be too happy about that. But for now, it looks like the market's okay with where inflation is headed, and it's basically gone straight up since they first started cutting at the Fed, currently around 3%. Now, there's been some soft suggestions that 2.5 to 3.5 is basically the new normal. It's hard to make that the new normal when you haven't hit your previous targets, but they may implement a band that they wish to achieve versus a flat 2% target. That will get them out of the jam of not hitting the target, but that will also hurt their credibility. So we'll see what he says in this meeting, and then going forward, if Trump disrupts the apple cart here and deportations bring inflation higher or tariffs bring inflation higher, then we'll see what happens. But this is not going away in 2025, that's for sure. Here's the projections from the Fed 2.86, which would be a month-over-month rise from last month. So we're only halfway through this month, but still expected to increase. And this CPI print is expected to be reasonably okay, but still not to their target. And we do have expected moves higher on month-over-month PCE. Now, they have said at the Fed previously that they care more about the labor market than inflation at this point in time, but they're going to have to choose here. If inflation keeps rising, they may stop at 3.25 or something and just plateau, 4.25, and just plateau rates there to see what happens. And that's something to watch out for into 2025. Something else which is kind of on the scary side of the equation is banking liquidity. One way to measure this is just to look at the reverse repo and see, okay, how much is left? There's the lowest amount left in here since 2021. We can look at small banks and large banks reserves, but the truth is there's no hard and fast liquidity number that anybody really knows for the US. And so the Fed may be more apt to flip from QT to QE if they are concerned about liquidity in the ecosystem. Something else to pay very close attention to in the meeting is if Powell mentions anything about QT versus QE, and if he gets asked about QT versus QE, because that's something else that will help push inflation higher, flipping from QT to QE. Looking at bonds in the thick red line here, the yield curve is now the least inverted it has been in the past year. You can see we've almost normalized the entire curve here, and this will continue to fall on the short end on Wednesday with a cut. So I would definitely look at this Wednesday to see if this looks any different. But all of the doomers who had previously been saying, hey, we're inverted, it's a recession, it's a recession, it's a recession, that's less true than when we uninvert, then we are more likely to see a recession. Again, it's harder to say, is it different this time if we don't have a recession? I don't think we can really make that call until we uninvert. And then for the next 2-3 years, do we see a recession after that? Looking at the timing of this, it's basically impossible to pick that out. This is the 10-2 yield curve. The previous uninversion, let's say in 08, right? It took a good while for the recession to actually show up. Now the recessions are declared after the fact by NBER, but even still, there are ways that people obviously know a recession is happening based on unemployment. In any regard, unemployment doesn't appear to be on a runaway freight train just yet. So we have that on our side. But definitely something to pay close attention to into 2025. What is inflation? What is unemployment? Every month, this is going to be a theme going forward, especially if inflation starts ticking higher above 3.5 to 4, 4.5, right? What is tolerable in 2025 is the question. This is the 10-year 3-month curve, which is uninverted for the first time since the inversion. This has a better hit rate than the 10-2, and this should also be a recession in 2020. But again, it's hard to time exactly when, based on the uninversion, the recession shows up. This was 2001, I think 2008 here, 1990, 80s, but it certainly has a higher probability of becoming a recession after the uninversions. Looking at the bond complex, one thing technicals help you do is just say, is there anything obvious here? Is there anything obviously bullish, obviously bearish? Are we in a trend at all? Are we ready to make a turn? Are we ready to flip from one to another, right? Just at first glance, if it's not obvious, then the answer is neutral. Across the board here, as a group, I would say neutral. TLT looks the worst amongst the group, which is the 20-year bond. That looks bearish to me more than anything else here. Ag, shy on the short end, those look okay, but flat, neutral. You know, you're not going to make a lot of money in that. That's okay. People don't seek those out for volatility anyway. But I guess into 2025, something to pay attention to on the long end is if TLT continues to sell off for whatever reason, do we see something like the BTFP gets spun up again? Do we see regional banks in trouble again? Do we see regional banks trading like they're in trouble again? Something to think about, because these charts do not look like much of anything at this point. There was a failed bullish breakout attempt, and that's about it on TLT. I think the next bullish thing to watch for would be on the weekly. If TLT can have and hold a weekly breakout, that would be something to watch for on the cloud. But so far, it's been very choppy. Definitely something to pay attention to into 2025. All right, the dollar still very strong, still looks very bullish up here. It's held these levels. Is it going to break the range high? Is it going to break out? Is this an inverted head and shoulders? Is this a cup and handle? It's plenty bullish on the cloud, and crypto hasn't really cared about it just yet. But I'd imagine if we get back to 108, 110, if the 10-year gets closer to 5%, then we run into more structural issues where risk assets tend not to get too happy. But for now, it looks like we party on with the Mag7, the majority pushing all-time highs. Oil is another one, obviously, to watch into 2025. The technicals here aren't bullish. Are they shortable? Are they tradable is the question. I don't really think there's much of anything here. It just looks like mega turbo uber chop to me. Maybe this double bottoms if we get back to 80, but on a high time frame cloud, this just tells you to ignore it. It's bearish for the most part. Legacy looks good. Yeah, we're holding highs. We're consolidating at highs. That's that. There's not really much else to say. As long as we're not falling off the table here, crypto should look good. Legacy probably won't fall off the table so long as yields are reasonably okay, dollar strength reasonably okay. Everything talks to everything else. So that's why we pay attention to anything other than BTC at all. But cloud-wise, SPY looks fine. Equal weight RSP had its worst 10 days on record as far as 10 red days in a row. Just a wild chart. This is equal weighted S&P. Maybe it just holds this range. Maybe it doesn't. A lot of the doomer bears love to point to the RSP and say, if there is too much concentration, it's bearish. If there's not enough breadth, that's bearish. Okay, well, again, like, you can trade whatever you want, but from a relative value perspective, there are clear winners and losers. And using this as a signal hasn't proved to be too useful in picking out the winners, at least. Now, that day may change one day, but it has not changed so far. But even this, trend-wise, still looks fine despite terrible 10 days it had. Q's hit a new all-time high today and have continually hit all-time highs really since November. We're looking a little parabolic here. We're looking a little journey towards blow off top here, and that's probably because of the Mag7 breakouts that we're seeing, but BTC certainly benefiting from that. And just as a funny chart to think about, on the bottom here is the US version of the leveraged QQQ. It's the triple leveraged QQQ. Comparing that to the 5x leveraged Mag7, I believe this is European. I don't think Americans can access this. This has continued to make all-time highs. One issue with these leveraged ETFs is volatility drag, which just means over time, this will not act as a 3x ETF. It will not hold that, and neither will the 5x ETF. But what these ETFs do well is when there's a clear direction, when there is not so much chop over time, they act as you'd expect. Just a very interesting dynamic since May. This is not even year to date. This is just since May. Looking at MSTR first here, it survived the 4-hour cloud, and that may be enough to declare victory here on trend, and it may be ready to go again with price above cloud there. And it's certainly something you'd want to see if you were bullish. So this had its parabola, had its blow off top, gave a bunch back, held where it needed to, and looks ready to potentially go again. Had some fundamental news, obviously. So from that perspective, it looks fine. This would be a different story if we were below the cloud, if we were below 350, if we didn't get the QQQ inclusion, then it's a different story. If, BTC was breaking down from 100 to 94 versus 100 to 107, but everything has gone MSTR's way so far. So there's that. SMLR, poor man's MSTR, also doing quite well. This thing moved very quickly. Didn't really give you much of a chance to take the trade, but this one is reaching near its expected target in the near term here on the weekly. Of all the Mag7, to me, NVIDIA looks the most bearish, and we don't need all of them to be performing magically well for the indices to do well. So it's good that despite NVIDIA's bearishness with the head and shoulders here, the others are picking up slack in a big way, pushing all-time highs. This just is a massive avoid to me until either this breaks down or it's back above 145. Apple, ascending triangle, continues to push all-time highs. Looks like it's ready for 270s-ish. We just had an ascending triangle breakout on Meta. This one broke out when everything else was kind of consolidating and doing a bunch of nothing. It looks fine for more eventually here based on the previous ascending triangle. Microsoft had the risk of breaking down with a multi-month head and shoulders. This could still play out as a multi-shouldered head and shoulders, but for the most part, I think it's in the clear now. It certainly looks more bullish up here than it did at 410. But you definitely got to be mindful, candles like the candle we had 2 days ago at Gravestone Doji or Shooting Star, whatever you want to call it, certainly not bullish, but it's in a better spot. It's in a better place here on the cloud relative to a couple weeks ago. Google, new all-time high. Not really much to say here. It had an inverted head and shoulders. It had some antitrust stuff. And then they released a QC chip and we're bullish again, right? So I think this is the upside risks for everything in the Mag7. What sort of innovations can we unlock and go after NVIDIA? And it makes sense that if Google's doing things in that realm, if Amazon is doing things in that realm, then maybe NVIDIA's profit margins will continue to shrink here. Tesla's basically on another planet, not matching any fundamentals at all. It's just trading based on proximity to the next president, which is fine. But the technicals were correct. 270 was the level. It just so happened to be around the election. And the rest is history here. It's in the measured move at a new all-time high today. Just going around the horn on some of the EV stuff. Rivian also maybe something to watch for those who want to thrill into 2025. This could be a mega falling wedge. Could break up out of the cloud there. Uber looking less good than everything else. Uber's basically been trading as an inverse Tesla. So as long as Tesla does really well, I'd expect Uber to do very, very poorly. But that's a relative value to trade to pay attention to once Tesla looks a little bit more toppy. But right now, it's all systems go on that chart. Lyft also doesn't have a great chart, doesn't really trade very well in general down here between 10 and 20, but I do like it above 20 potentially in 2025 if for whatever reason this company starts to get bullish again, right? Amazon, in the same vein of Google with AI innovation or computing innovation, should also continue to do very well into 2025. And I still like a pretty substantial target higher for Amazon just based on the measured move there. Have to talk about Broadcom, AVGO. They have entered the $1 trillion club on market cap. And this one had an ascending triangle breakout that I certainly wasn't watching. But in hindsight here, there's usually always a reason why we get moves like this, whether it's GME or AMC. And by reason, I mean some sort of consolidation or chart pattern. These things typically don't just happen magically out of nowhere. As far as the expected move, we're within the wheelhouse 235 to 270 and just a crazy gap up from 180. In legacy, the breakout trade here is a bit different. You do have to kind of cheat it a little bit. If you waited for the breakout, you were left in the dust. Because this was almost 3/4 complete or over 3/4 complete on the triangle shape and it was above the cloud, it was probably good enough to take the trade, but you certainly had to be paying attention to this chart in particular before the breakout. It certainly looks like, at least in the near term, that the train has left the station on that one. On the crypto side, Square still looks great on the weekly. No issues with this. I like this all the way down to 70. Looks fine. Might take a minute. Might not overperform relative to BTC or anything else, but the chart in a vacuum still looks very good. This is Coin. It tried to break out, reconsolidated. This is perhaps morphing into an ascending triangle itself and something to watch into 2025 with any regulatory clarity, regulatory easement, anything regarding anything about crypto on the regulatory side that's beneficial. Coin should probably do very well on the back of that. And then lastly, the miners, which have been on a high volatility, highly disappointing journey, in my opinion, relative to other 2x BTC products. We are at a bit of a crossroads here in that if this is a macro cup and handle, which I don't know, right? Maybe I'm just making things up here, but if this is a cup and handle, it would measure to 50 on the WGMI ETF, the basket ETF. Some of these miners individually look better than others. I would certainly look at those miners relative to WGMI. What do those miners look like relative to BTC? And maybe these can catch a better bid if MSTR has slowed down a little bit. Certainly if NVIDIA has slowed down a little bit. One thing I noticed with cores in particular, cores also has this head and shoulders characteristic to it on lower timeframes. So you do have this bifurcation of maybe trifurcation, miners buying BTC, miners involved with AI and HPC, and then miners that are just miners like CleanSpark that are just mining Bitcoin. They all have their own story, doing well for their own reasons. But as a group, definitely something to watch for here if we get a break above 32 on diagonal resistance. So overall, Bitcoin following the Mag7 here, and the Mag7 picking up where NVIDIA looks weak. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.